Welcome back for another report on the gold market. Gold moved lower during the past week and stabilized at lower grounds currently, after indications of economic recovery circumstances globally possibly being better than forecasted. Even though gold's price activity has been tilted to the downside in the past days, as researchers we tend to be on the watch for any matters with the potential of creating strong volatility for the shiny metal. Our aim is to identify and briefly explain up-to-date topics that relate to gold's price action, while at the same time our personal opinion will be part of this report. Gold's price was mostly affected by a strengthening USD in the previous days. Even though the currency did not make excessive moves higher, it indicated some constant strength, pushing higher for 4 out of the 5 past daily sessions. The past week was interesting in our opinion due to the favorable US economic data that supported the idea that economic activity in August had risen to considerable levels. Even though analysts and general market expectations were higher than the figures realized, economic progress is evident. In more detail, the ISM manufacturing PMI indicator outperformed market expectations, reaching its highest levels since January 2019, showing that economic activity in the sector expanded substantially. On the other hand, the ADP national employment figure for August rose compared to the previous months, but underperformed market expectations. However, the most important release in the past week was the US non-farm payrolls for August. The employment report seemed to be tilted to the positive side, with a drop of the unemployment rate to 8.4% being impressive, yet some worries persist on a possible slowdown of jobs created. Gold dropped upon release of the report, indicating the market saw risks tilted to the downside, but traders jumped right back in after the sell-off and returned gold's price higher for the day. Even though the economic indicators did not produce extraordinary results, they confirmed that the US economy is recovering on a faster pace than initially thought and could lead gold's price to a further decline if the positive news keeps coming in. In the upcoming days, more financial releases could keep gold traders on the edge. From the US, we get the weekly initial jobless claims figure on the 10th of September and the CPI inflation data on the 11th of September. Both are important readings that could create substantial volatility for gold's price in case of unexpected outcomes. Some analysts also believe that the upcoming ECB interest rate decision on the 10th of September could also move gold's price. Furthermore, gold traders may be interested in the Brexit developments. The EU and the UK are currently not in agreement for any deal after the UK is to leave the bloc by year's end. Headlines on a potential no-deal Brexit have in the past created waves within the financial markets, and we would expect gold to react accordingly in a no-deal scenario or an agreement. However, the matter remains under great uncertainty. Moving now to the technical analysis and goals for our chart. As noted in our fundamental analysis, gold has evidently moved lower since our past report, since all our support levels have now turned to resistances. We have changed our view to sideways with bearish tendencies. Yet if the precious metal clearly breaches our S1 1920 support level, it would be a clear indication of a bearish sentiment. This is also emphasized by the triangle we have set, as it will signal a breach of the lines forming the lower upper trend line. The other possible levels lower in our opinion are the S2 1900 round number threshold that traders may keep in mind as a key level. Even lower, the S3 1880 that was last seen on the 12th of August is also possible in a continuous selling run. In case the precious metal makes a turn higher, then the R1 1940 resistance line could be reapproached first, as a lot of activity had taken place nearby that level in the most recent sessions. In case a strong bullish momentum comes into play, we would suggest that traders keep in mind the R2 1960 line and even higher the R3 1980 hurdle. Please note, in case of a breach of the R3 1980 line, the trend could shift to bullish. In a more short-term view, in September, the metal has dropped from the R3 1980 line to test the S1 1920 level, which implies that so far the bears are in charge. This is also confirmed by the RSI indicator below our chart, which is currently running nearby the 40 level. From all of us here at IronFX, best wishes for solid trading.